Well, thank you everyone for joining us at London Climate Action Week. My name is Jan Swiderski. I'm a trustee of the Climate Crisis Foundation. My background is a career in finance, but I've always had a keen interest in the environment. I left finance to run an organic farm, which is also now a rewilding project. But most of my time is spent on the Global Returns Project, which we're going to talk to you about today. With me are Jasper Judd, one of my co-trustees, and Jack Chelman, our communications manager. Over to you, Jasper.
Thanks, Jan. So as Jan said, I'm Jasper Judd, also a trustee of the Climate Crisis Foundation. My background is I'm a chartered accountant. My background is in business, in finance and strategy. I'm currently a non-executive director of a couple of investment trusts, and I paint portraits. But like Jan, the bulk of my time is spent on the Global Returns Project. And that's the sort of daily work of the Climate Crisis Foundation. I've come fairly late to the environmental arena, and I'm certainly not in a position to lecture anybody about what they should and shouldn't do. However, as the father of 4 children, I, like so many others, have become acutely aware that their future is in jeopardy. And that's why I'm here, and that's why I co-founded the Global Returns Project. We're going to show you a video shortly where Jan will explain what the Global Returns Project is all about. But first, I'd like to talk briefly about the background to what we're doing. And given this is London Climate Action Week, people in the audience are likely to be reasonably well informed about the climate crisis. However, there's an aspect of the situation that is often insufficiently emphasized. On our current trajectory, we are set to emit as much carbon dioxide over the next 30 years as we have already emitted since the beginning of the Industrial Revolution. Unfortunately, an increasing number of nations, including the UK, are committing to carbon neutrality by 2050. And hopefully, that list will shortly include the USA. Now, let us assume optimistically that all nations globally commit to this goal and that collectively we achieve it across the world. We arrive at net zero emissions by 2050. Now, because carbon dioxide as the predominant greenhouse gas stays in the atmosphere almost indefinitely, the path we take to get to net zero is as important as the goal itself, given that every ton of carbon emitted every year adds to the cumulative total. So getting to net zero slowly at first and then faster makes the cumulative problem, and this is a cumulative problem, much worse than getting there fast at first and then more slowly. Now, in order to have a hope of keeping global warming to under 1.5 degrees over pre-industrial levels, the UN has calculated that we need to halve emissions from their current level from now by 2030, and then to zero by 2050. That is to say, a rapid drop followed by a gentler decline. If we were to do this in the reverse order, i.e. a gentle decline followed by a rapid drop, let alone allowing emissions to continue to increase, we will end up with far more emissions and climate deterioration. So the key to minimizing our total emissions is what we do over the next 10 years. The speed of our action matters at least as much as the scale of our action. So that's why this decade, the decade that's already started, is the critical one for tackling emissions, and why it's so important to fund initiatives that can make a difference now. The Global Returns Project was founded with this imperative in mind, a way to fund the climate solutions that are already effective so that we can tackle this crisis in a way that's consistent with its urgency. So, having outlined the context, I'll hand back to Jan, who will explain the Global Returns Project in this video in greater detail. So over to you, Jan.
I'm going to tell you about a simple idea for personal climate action, which has the potential to raise billions of dollars for climate solutions. A few years ago, I was a fund manager. I was investing in countries all over the world. I thought my activities were doing good, helping finance development and business and helping to lift people out of poverty. There was some element of truth to that, but I could also see that there were big problems being caused by the companies and countries we were investing in. Problems of deforestation, pollution, habitat loss, and climate change. I left finance to go and run an organic farm, and I became increasingly concerned about the crisis of biodiversity and climate. I was searching for things I could do about it and started to look into setting up a think tank to lobby governments or raise awareness. But then I thought, does the world really need another voice pointing out what's wrong? I started writing occasional newsletters about the crisis, and a good friend, Jasper, said to me, "You keep sending all this terrifying stuff, but what can we actually do about it?" So we started brainstorming and researching, and we developed the idea behind the Global Returns Project. What if there was a way to use the financial system to do good? After all, finance operates in almost every area of human activity. What if we could use that system to solve these problems and make the world a better place? Well, lots of people have thought about this before. Some are divesting from fossil fuel companies, and we now have sustainable investing, ESG, impact investing, and green bonds. Now, this is all great news and very helpful, but it's only a minority of investments that follow these rules, and these mechanisms don't address some of the most difficult problems. There is no market mechanism for suing the polluters or for protecting the rainforests and other habitats. The other problem is that many fund managers still see their job as maximising returns to the exclusion of these other considerations. But all this money ultimately belongs to individual savers and investors, and we can decide what matters. Every investment has an impact, and it affects the future that we are saving for. Private individuals globally have savings and investments worth around $140 trillion. That's a mind-numbing figure. And individuals can each decide what to do with their own money. So what if some tiny percentage of this figure could be used to solve those problems that have no market solution? So this is our idea. If everyone with savings and investments was given the option by their bank or broker to tick a box every year to automatically give a tiny proportion of their money to solve some of these problems, then a good number of people would do that. Those people would be agreeing to reinvest in Earth, which means to give just 0.25% of savings and investments to the best not-for-profit climate solutions. Let's say only 3 in 100 people did that. Well, that would be 10 billion a year. That really would make a difference. Behavioural research tells us that if this choice is presented in that context, so that it is a normal and easy thing to do, then many of us will participate and choose to reinvest in Earth. We can only reach those sorts of numbers if financial institutions provide this service. Many financial institutions are saying governments need to take much more action on climate change, but many of them see their role as just looking after the money, not helping their clients tackle the climate crisis. Our plan is to show them that this limit on their responsibilities is an illusion. Savings cannot be separated from our future. That's what they're for. Every investment has an impact. Every time you save money, it has an effect. When you put money in the bank does something with that money. When you invest your money, those investments have an effect in the real world. which affects our future. Our investments and our children share the same future. We can help remove these mental barriers about the role of financial services and the role in the crisis. Our campaign is not an attack on the bankers and fund managers. I used to be one of them, working in the heart of capitalism. On the contrary, we know that many people in finance are working hard to change things, and we want to help them. We need to divest from fossil fuels, invest in genuinely sustainable, and reinvest in Earth to solve the problems that markets cannot address. There are amazing disruptive technologies which will help us address the crisis. Innovations in renewables, energy storage, food production, and transport. But it's going to take years or decades for these to become the norm. Meanwhile, we need to reinvest in Earth to stop making things worse, and also to protect the natural carbon sinks of the planet, working with nature-based solutions to draw down CO2 at the scale required to make a difference. The money that's reinvested in Earth goes to the best not-for-profit climate organisations who are working on climate solutions, organisations that are protecting rainforests, planting trees, providing clean, sustainable energy, exposing harmful supply chains, using the law to sue the polluters and protect the Earth. Part of making this easy is for us to do the work of identifying the best projects. We've thoroughly researched over 160 climate organisations and have chosen some of the most effective and most scalable. 100% of the money that is raised when people reinvest in Earth goes to our charity partners. So far, we've identified 5 charity partners that we've already started to raise money for. Ashton, Client Earth, Global Canopy, Rainforest Trust, and Trillion Trees through WWF. Investing in these projects delivers real, identifiable returns. The returns are externalized and global, but they are real. Decarbonizing the economy is not enough. We have to invest in natural systems that draw down CO2 every day of every year. We're at a unique moment in time. The COVID-19 pandemic is a tragedy for so many, but it's also shown that things we didn't believe were possible are possible, from home working to virtual medical consultations. It has also shown us how fast perceived barriers can disappear and how we can change systems in an emergency. Just like the pandemic, the climate crisis won't resolve itself. It will require some changes. But here's the good news. Real change is within reach. We know that financial institutions are ready for change. We know that savers and investors are ready to make a difference. And we now know that we can change the way we do things, and fast. We're on the brink of a breakthrough. So the Global Returns Project is looking for the first 5,000 people who will join us and reinvest in Earth, commit to donating 0.25% of their savings and investments every year to the best climate solutions. Together, these pioneers will show the brokers and the bankers that the world has changed and that savers and investors want to do this, and we want their cooperation to make this easy and normal for everyone. Part of this idea is that we're deliberately blurring the line between investment and philanthropy. If we have savings and investments, we're responsible not just for that money, but also for the effect it has on the world. The investment world works in percentages, and when you reinvest in Earth, the percentage is the same for everyone. If you have £4,000, that's £10 a year. And if you have £10 million, that's 25,000 a year. But it's the same percentage for everyone. So, when faced with this planet-sized problem, we're not helpless. We can each take personal action. When you do this, you're joining our campaign to help the financial services industry make a small change in order to make it normal and easy for thousands and then millions of others to reinvest in Earth and fund global climate solutions on a massive scale. This is our moment. It's time to act. Thank you.
Thank you for watching that. I just want to add a couple of comments. Although we have a background in business and finance, this is a not-for-profit activity, and we are a UK registered charity. And also the 3 trustees who work full-time on this alongside our paid staff are unpaid for their work. And just to emphasize again, if you reinvest in Earth, 100% of the money goes to the chosen charities. So for every £100 that you donate, £100 goes to that charity with no fees and no deductions. And I think we've got a few questions coming in, so I'll hand over to Jack to try and guide us through answering some of them. Thank you.
Sure. Thanks, Jan. Everyone can submit questions for answering and for discussion using the Q&A button at the bottom of your screen. I see we have some coming in already, which is great, but you can feel free to submit those and we'll take a look. Just a quick note before we move on. Obviously, we've been talking a lot about reinvesting in Earth this morning, which is incredibly important. But it's important to say that if you are excited about this campaign and like what's going on, you can support the campaign today, right now, by going to globalreturnsproject.earth and joining the project, giving us your name and email, and that signs you up for our newsletter and our updates. But it's also a really important step in building momentum for this campaign and showing people that there's a big group behind what we're doing. So really encourage you to do that. In the meantime, if you have any questions about the project, about reinvesting in Earth, joining, anything like that, you're more than welcome to email us. You can email Jan or Jasper at jan@climatecrisis.earth or jasper@climatecrisis.earth. So I see some great questions coming in already. I think a good place to start is a question about the context of the project that we're working on. At London Climate Action Week, we're part of the whole of society climate mobilization category. And when we're talking about the context of this project and thinking about financial institutions being ready for change, I think that really speaks to that theme that we're a part of today, whole of society mobilization. So Jan or Jasper, I wonder if you could speak a little bit more about that context and why we think financial institutions might be ready to mobilize and change in this way.
Shall I start?
You kick off.
So, I mean, I think there are a few things we can point to. There's the Global Investor Statement on Climate Change, where 631 institutional investors who manage $37 trillion in assets wrote to the G20 and said, we think governments need to act faster and do more on climate change. And in some ways, this campaign is our response to them to say, well, actually, here's something really straightforward that you can do to help us act faster on climate change. About a month ago, we saw UBS say to all its private clients that they should be investing sustainably, not just for the planet, but for the best returns. We also saw the
CEO of the largest fund manager in the world, BlackRock, last year, saying that climate risk is investment risk, and pivoting their whole marketing approach to sustainable investing. So we know that, you know, finance is responding to changes in society and in their client base. And we've seen tremendous growth in ESG and tremendous growth in, for instance, the green bond market, which is now over $1 trillion in investments. So I think all of these things just reflect partly the scale of the action we need to take, but also the readiness of finance to change. And the Global Returns Project is about helping point the way, and you can help us by joining us, because anyone who reinvests in Earth is actually going to help us tip into a much bigger change, which is to make reinvesting in Earth a normal thing that all financial intermediaries would offer.
And I might just add to that, Jan, that it's important to think about, I think, you know, in your talk, you mentioned about every investment, everything you do with your funds, your assets, has an impact. And one of the things that is becoming now increasingly understood is that this concept of a spectrum of capital, that the spectrum ranges from investments where you're just purely looking for a financial return and don't have any, you're not taking into account any of the impacts they may have, through ESG and sustainability investments, and then on through impact investments, where you're really trying to identify and measure the impact outside pure financial returns that an investment has, and then all the way over to those areas where there is no financial return as such, but there are real returns, and such as the examples of the climate charities, the charity partners that we have, and those are also a very important part of that total spectrum. And I think that's now becoming much more mainstream as an idea, as the fact that it's not just all about financial return.
Great, thank you guys. So we have a good sort of follow-up question from James Wallace, who is asking, obviously in the video, we talk about these best climate solutions that the project supports. James is asking, can you tell us more about selecting those charities? What measures and process do we use to say these are the not-for-profits that are you know, most important to support right now?
Sure, well, maybe I'll take that, and Jan to add anything. So as Jan explained again in the video, we've looked at a large number of organizations that are trying to impact climate and emissions that are not for profit. We have built a quite detailed methodology as to how to assess them. And we have taken all sorts of other inputs into that. There's work of organizations like Drawdown and so on. And the way that it works effectively, there are two stages. One is to look at the size of the organization, its governance and so on, to make sure it's a solid organization. So that's number one. And as long as you pass through that gate, you move into the second stage, which is where we rate organizations on a range of different factors. The biggest of those is impact. That is to say, what impact can these organizations make in terms of emissions, either sequestration of carbon or reduction of emissions. We also look at scalability. This is an ambitious program. We want to raise a lot of money. Scalability is really important if we're going to be able to put decent amounts of money to work effectively. And then we also look at a range of other things. So we look at co-benefits. Are the benefits, for example, in helping women in developing countries? An example is also that Rainforest Trust, has an anonymous donor that's doubling every donation that goes in for the next, I think, roughly $40 million. And so you get sort of, twice as much bang for your buck. And that's another sort of, if you like, that's in the other category. So we look at a whole range of different perspectives, and we end up with a score. And it's really the ones with the highest scores that end up on our list. So we've got 5 currently, as Jan took you through. And that's after sifting through a great deal. We will be adding to that number, but we'll be adding selectively because we want to avoid people having choice overload and having too many to choose from. So I hope exactly. Yeah.
Great. Obviously, this relationship between individual action and the support of financial institutions, you know, it can be a tricky thing to get your head around. One of our attendees is asking, Mark Hales is asking, how exactly the process of getting financial institutions involved or wealth managers, how that works. For instance, how would one instruct a financial advisor or investment company to add this, you know, reinvestment in Earth, make a deduction in that way? Just how do you approach someone like that?
I thank Mark Hales for his question, and say that it's very early days. We've only just started our campaign last month, and we wanted to start with an initial public campaign to prove that there are people who are prepared to do this. And there are people who are prepared to do this because we already have people signing up. So as of today, the way it gets implemented is somebody just goes to our website and they calculate what the relevant amount is, and they simply donate directly to us, and they can choose either one of the charities or all five, it's up to them, or any two, and so on. So for the moment, it's done in that way. But simultaneously, we're also having conversations with financial institutions and wealth managers and private banks. And the aim is to convince the early adopter there, you know, whoever we identify as the first early adopter, and some of those conversations are very promising, to actually implement this. And then obviously their clients would be able to just tick that box and reinvest in Earth. And, you know, the real power of the idea will come when we have, you know, a large proportion of financial institutions who are just doing this as a matter of course, and that everyone thinks it's a normal thing to do. Are you going to reinvest in Earth? Yes or no, tick the box, and so on. And that's the behavioral power of the idea as well. It is to get people to think about this just as something you do in the context of your investments. And I see that someone else asked, would it be possible to partner with the likes of BlackRock to create a branded Planet First ETF with an additional 25 basis points fee going to the charity? Well, we would love to do that. So if anyone works for BlackRock in the audience, please get in touch. But joking aside, any of you can actually contact your financial intermediary, your wealth manager, your private bank, and just say, I saw this, it's really interesting, and ask them to get in touch with us, because that's what we're here for.
Jasper, earlier when you spoke about the spectrum of what you can do with capital, that obviously relates to this idea that Jan was talking about in his talk about blurring the line between investment and philanthropy. And one of our attendees has asked a question that I think touches on that. Joss has asked, going forward, does the Global Returns Project see a diversification of its selected recipients, not just charities, but perhaps directing investment into innovative green technologies, things like that?
Well, so just to explain a little bit of the context for this, we are a registered charity, and that puts certain constraints on where money that we, you know, funds that we grant through this charity can go. Certainly our intention is to expand the list of potential investments. If we're successful and within 10 years we're raising $10 billion, it's pretty clear that the selection of organizations we have at the moment would struggle to deal with that sort of sum. So we, you know, just simply by dint of growth and size, we'll need to find more organizations to invest in or to put money into. But again, we're concerned to make sure that we present, you know, not this sort of massive plethora of things to put money into. I think it's entirely possible that over time, there might be some very early stage, high risk stage initiatives that could be profitable eventually, but where there's just not enough interest because the risk is so high to put money in to get them kicked off. I think it's entirely conceivable we might do that sort of thing. But initially, all the organizations that we've chosen are registered charities, and it's our intention, at least for the short to medium term, that the initiatives will be in that sort of not-for-profit arena.
Another one of our attendees has asked a good question about the ambitions of the project, and obviously we're aiming to get to raising 10 billion annually. But one of our attendees is noting that a secure supply of qualified, impactful deal flow is a recognized problem and for charities, and I think is getting to this question of, how do we make sure that as we ramp up donations to selected charities, how is it scalable? How do the charities handle influxes of donations in that process?
Well, one of the things that I explained about when, in our sort of selection methodology, one of the key criteria that we look at is scalability. And that's scalability both in terms of just the sort of capacity to expand operations, but also in terms of, if you like, the ambition to do so. And so all of the organizations we've chosen, we think have significant capacity to absorb more in the way of funds. And certainly, in the next year, 2, 3 years, we think there's going to be ample capacity to do that. I think the question is valid as we get bigger and bigger, assuming this really takes off and we end up with billions available, then then we'll need obviously to think more about the sort of broad range of organizations that could eventually cope with those sorts of amounts of money.
That will be a high-class problem to have.
It will indeed.
I see a question from Sirish Hawazi that I'd like to answer. And he says, the world is facing many different kinds of challenges and disasters, particularly in recent times with the pandemic, and growing numbers of charities vying for funding to address poverty, human trafficking, children's needs, famine, and so forth. What do you feel your strategy is to fit into people's scope of attention for them to commit to the cause of Earth, which grabs the emotion less than some of these other causes? And I think that's a very good question. And I think the only thing I would say is that if people are thinking about their investments, and that's our target market, is people who are thinking about their investments, they're people who are thinking about the shape of the world in the future, because that's what their investments are for. And one of the most shocking reports I read this year was from the proceedings of the National Academy of Sciences, and they talked about the human climate niche. And basically this whole species, the human race, has evolved within its own particular climate niche. Our niche is a mean annual temperature of 11 to 15 degrees centigrade. And if we were to continue with business as usual, 1/3 of the area occupied by humans today would be outside that climate niche within the next 50 years. So put simply, the area that around 3 billion people occupy would be uninhabitable. So all of those other problems to do with famine, child poverty, security, education, disease, all of those would get multiple times worse. And I suppose what we're saying is, for our project to work, we just need 300 people to understand that. And they will say, well, actually this trumps everything, because this is where the money has to go.
I think we have Harriet Lamb in the audience today, who's the CEO of one of our charity partners, Ashton, and she's asking, has COVID had any impact on the interest in our initiative? Does it make people more likely to invest in tackling systemic root causes, or has it maybe diverted people?
Well, again, Jan referred in his talk to the fact that we've come to realize that the sort of things that we thought were impossible turn out to be possible, and we can throw enormous amounts of money at things and we can change things very rapidly. So I think clearly at the moment, a lot of people are just very concerned about the short-term impacts of the pandemic, and rightly so. But I think we're also seeing there's a sort of shift in people's assessment of how we can address big problems. There is a shift in people's understanding that the world is a physically connected place in a way that people haven't really they haven't really internalized before. This idea that we're actually physically connected through a pandemic is very, very much analogous to the fact that we're physically connected by climate. And obviously we've got governments like the UK coming out with their 10-point plan this week. I think there is a sense that the pandemic, horrific though it has been, may open a lot of doors. And I think, obviously we'll have to see. These are early days still, we're still in lockdown. But I think our sense is very much that there is a positive side to what has been a horrific tragedy.
Our attendee, Ella Duran, is thinking again about the relationship between the project and other ways that people think sustainably with finance. And she's asking, can one switch one's pension pot to the Global Returns Project? Would we need a financial advisor to do that?
Well, maybe I'll take this. I mean, one of our ambitions is that we will be able to persuade eventually the government and tax authorities to accept that people can actually put money into projects that have no financial return out of their pension funds. At the moment, there are all sorts of legal and regulatory restrictions about what you can do with pensions. And so currently that's not possible in the UK, but we're very much hoping it will become possible as the government realizes that this is something that people will want to do. So, hold that thought, because that's something we would definitely support.
Thinking again about the charities that we support and the not-for-profits that are part of these, best climate solutions portfolio that we assemble. One of our attendees has sort of identified that the charities we support focus on issues of climate mitigation rather than climate adaptation, and is asking why that's the focus of the project.
Well, put simply, the more mitigation we can do now, the less adaptation we will have to do. And whilst adaptation is already necessary and important, we felt the urgency was to get as much mitigation done as possible to reduce or draw down emissions rather than adapting. And so therefore, this is all about mitigation.
I mean, it's pretty clear that both will be necessary, right? I mean, there are changes coming. So adaptation is going to be something that we're going to have to deal with. We're going to have to deal with rising sea levels. We're going to have to deal with migration. But our focus is on mitigation for the reasons that Jan said.
Another attendee has picked up on something else that was discussed, Jan, in your talk, this question of behavioral research playing into the framing of this project. And I don't think that's something we've discussed very much yet this morning. So maybe one of you could sort of explain how behavioral research is played into constructing this.
Well, it's to do with how you motivate people to take action, because I think, we've all had that situation where we have the best intention in the world to do something and we just never get around to it. And so there are just various nudges that can happen to help increase the probability of people taking action. And one of the main nudges is actually, if this is presented within the context of a private bank or a financial advisor or a financial product, that immediately normalizes it. And we're all social animals. We like to know that other people are doing this thing that we're doing with us. And so we like to follow social norms. And so that in itself, the dynamic would change by this choice being presented in that context, and that would increase uptake. The other one is removing friction. So if something is a bit of a hassle to do and you're busy and something interrupts you, then the probability of it happening goes down. So if you can remove friction to make it easy, so that the payment system is set up, someone just needs to tick the box, we've done the research, we've chosen the charities so they don't have to go through all that, then that also increases the probability of the action. And then something that Jasper referred to earlier is choice overload. There are so many good organizations out there, and behaviorally it's well established that once you have too many choices, the probability of action goes down. And in fact, people presented with fewer choices tend to take action rather than people presented with the entire spectrum of choices. So these are some of the behavioral aspects which we've considered when coming up to the scheme, and we hope that that will significantly boost uptake.
Great, and I think we probably have just about time for one more question, and I think this one looks like a good one to close with. Someone's asking, just to circle back to this idea of supporting the project beyond reinvesting in Earth, what are the ways to spread the word and support this initiative?
Well, I guess, certainly do that. Certainly sign up to our newsletter if you haven't already. Certainly consider reinvesting in Earth. One of the things you can do is spread the word, quite frankly. Institution that you're close to, please do speak to them, and we'd love to talk to them. We're talking to a number at the moment, and there's quite a lot of interest, but this is very early days. We launched last month, so we're very keen to get the word out to more financial institutions, because there will be a few who say, yes, I'm happy to be an early adopter, and we're convinced that once we get a few on board, others will follow. So those are two ways you can help.
And just to follow on from that, I'm sure many people in the audience already support climate organizations, but to the extent that you can support some proportion of that by reinvesting in Earth through us, you will help us increase our numbers. And it's by increasing our numbers that you'll help us to do something much bigger, which is to get the attention of those financial intermediaries.
Well, great. Well, thank you so much, everyone, for these great questions and for submitting them. And I think that's probably a great place to stop the Q&A for now. Yeah, thanks everybody for attending. I'm sorry we didn't get through every question, but I think we've probably covered the great majority. But thank you for coming along and participating.
Yeah, thank you very much, everyone.
Thank you.